Good morning, everyone. Thank you for joining the Multifamily Market Update presented by the Multifamily Investment Advisors, backed by Keller Williams One Chicago and Keller Williams Commercial, where together we've achieved over 407 billion in sales volume for 2020. We're going to start this multifamily market update off by passing it off to Drew Heisman, who's our Director of Capital Analytics, going over a little bit of information regarding that.
Good afternoon, everyone. I'm going to start off by sharing my screen. Second. Sorry, guys. I'm just going to go ahead and give you my update. So the 10-year Treasury right now has been in a range between 1.67 and 1.75, currently sitting at 1.71 today, and it opened up at 1.73. The reason for its rise over the last couple of days has been due to the job report, which was released at the end of last week. And that report actually stated that jobs were up 916,000, which was the best number since August. And as we know that interest rates are correlated to the strength of the economy. So as that jobs report show that unemployment's going down, right now it's at about 6%. That's going to result in a higher 10-year Treasury rate. So it's been in that 1.7 range for the last few weeks. And I think based off the improvement of the economy that we could see that 2% number quicker than originally anticipated, maybe in the next few months. And then another article I came across from the multihousingnews.com. They were pretty much discussing that lenders are going to be getting to ease their reserve standards and requirements. So at the start of the pandemic, Freddie and Fannie required debt service reserves ranging from 6 to 18 months as a hedge against lost or late income, which were considerably high compared to our pre-pandemic reserve requirements. So it's been reported that lenders and Fannie and Freddie will begin to reduce those reserve requirements. And then one more statistic I wanted to throw out there was recently the national multi-percent of apartment households made full or partial rent by March 6, 2021, which is down 4.1% from a year ago on that date last year. So appreciate it, everyone.
Thanks for that information, Drew. Definitely appreciate that. Now, when it comes to actual new developments in Chicago and Illinois market in general, Jason, what information can you give us today regarding that?
Yeah, thanks, Travis. Good afternoon, everyone. I want to continue our conversation about the Invest Southwest program here in the city. Last week, we talked a little bit about some of the activity going on in the West Side neighborhoods of Chicago. So we looked at Austin and talked a little bit about the landmark structure that's going to be redeveloped, which is the Laramie Bank Building. So that property is actually going to be redeveloped into a blues museum, a bank branch, a cafe, a business incubator, and then they're also looking to use the adjacent land, 20,000 square feet of land behind the building, and also create some mixed income residential living as well. So I know that's really exciting for the Austin neighborhood and the Invest Southwest program in that area. And then if we also look at Auburn Gresham, it's a lot of development and activity going on in the Halsted and 79th and Halsted corridor. So within that little pocket right there, it's actually two projects taking place. One of those being the Healthy Living Center, which is kind of been identified as the focal point for development in Auburn Gresham. And with that Healthy Living Center, we're looking to add, about 15,000 square feet of space for a health center, a minority-owned pharmacy, a fitness center for the community, and then also getting some office space for the greater Aubrey Gresham Development Corporation, which is, kind of quarterbacking the Healthy Living Center as well. So, that's a cool project. And then directly across the street from the Healthy Living Center, we talked a little bit about the 23,000 square feet of vacant land that is actually being developed into about 56 units of affordable housing. And then it's also going to be some ground floor retail within that development as well, and some parking spaces included. So in that pocket, a lot of activity in terms of redevelopment and adaptive reuse projects. And all of this is being, taken within the Invest Southwest program. So it's a great, a lot of great activity going on throughout the city right now.
Thanks, Jason, for that information. Definitely some great activity in the city with all those developments and redevelopments in play. I'm going to take this moment to actually go for a brief pause and let you know that we're actually live on YouTube and live on Facebook. I want to take a chance to say, if you're actually on YouTube live right now, go ahead and subscribe to our channel where you're able to watch those recaps of the multifamily market updates. And I'll even post that link for you in the chat bubble there for us today. And now Vince, who's our lead buyer's agent on the team, give us some information into what investors are actually looking for when they're coming into this market.
Thanks for throwing me the ball there, Travis. We're seeing some interesting developments, obviously, throughout the city, some of which create a negative sentiment, unfortunately. You'll see crime reports. Obviously, the COVID numbers stagger back and forth week to week, and a bit of controversial politics make for investors questioning, hey, is Chicago really what I want to get into with regards to the market? Current, Chicago owners, wondering if they should double down and continue growing their portfolio here or reside elsewhere. I can certainly assure you that at the current time, Chicago maintains to be a strong investment market. Clearly, we have a wide range of developments coming to the city. Thank you, Jason, for indicating those things going on with Invest Southwest and other developments in the city. Obviously, we are seeing ground being broken this summer with the Story Obama Library. I know everyone's heard things back and forth over the years with that. But this past winter in December, the federal review for the Obama Library concluded and ground is to be broken, initiating that this summer. Additionally, there's a mega development sponsored by University of Illinois, 62 acres, 10,000 homes coming across the Chicago River. So Chicago maintains to really be a place that's progressing in regards to development. So it is progressive. It's also the third most populous metro area in the United States. It maintains to be that. Houston is just behind us, but they are not growing at a rate that shows that they will surpass us at any time soon. So you may hear talk about the population decline over the last 7 years, but it's so steady and minute that it kind of creates a flat curve, if anything, with regards to population decline. That population that we do have is 50% are renters, which is very high comparatively to this size of metro area. Very strong economics underwrite the Chicago environment with 36 Fortune 500 companies headquartering their operations here in Chicago. That makes for a strong tenant pool of very professional, high-level renters. And it's a great landing spot for the renters due to the fact that the average renter here spends less than 20% of their income on rent. So for your tenant pool, it's very competitive in that sense as well. And due to current economic forces, the ability to be mobile and that sort of thing, many factors ensure that a lot of those tenants will remain renters and not become home buyers in the near future. This is one of the markets that, in terms of housing prices, with New York having the average sale price at $1 million, with LA having the average sale price at $500,000, us coming in just above $300,000, there's a lot of room for growth. So it makes it very profitable for your average investor. Compared to New York and LA, a lot of things underwrite why this population might be more desirable. We don't have rent control currently. And for a lot of investors, that's actually a, incentive based reason why they would want to land here. So while we're seeing doubt on the ground with a lot of local investors, we're seeing out-of-town investors very confident, surging to Chicago. Business Insider rated us as one of the top 5 markets to purchase a rental property. So it's progressive, it's populous, and it's profitable. Those 3 Ps underwrite why Chicago is a very desirable landing spot for investors at the current time.
Thanks, Vince. Definitely some great information regarding that. Just going to take a brief moment here to allow Jerry Brown, one of our guests today on the webinar, share with us some information and updates that he's saying on his end.
Good afternoon, everyone. I'm Jerry Brown with Siegel and Callahan. In terms of what's going on with property taxes, some of this I think I've relayed before. As you know, Chicago is going to be fully reassessed this year. This is the assessment triennial year 2021. The pattern we expect to see for larger multifamily buildings, meaning 7 units or more, is a continuation of the pattern we've seen for the last 2 years with the north suburbs and the south suburbs. Fairly significant increases. The north suburbs saw increases averaging about 77% for larger assets, and through the appeals process, it was reduced to an average about 27%. The south suburbs, the initial assessments increased by about 50%. We're still waiting for the final results from the south suburbs to know what that, in terms of the appeals of the board of review, are going to look like. So we expect that the assessor is going to be somewhere between those 2 numbers for Chicago area multifamily buildings. The assessor is a bit behind schedule in terms of issuing the new assessments. They had a practitioners meeting in the last week or so. They indicated that they expect to start releasing some of the non-township, non-triennial towns within the next couple of weeks. They usually start with Rogers Park when it's a triennial year, so that's going to be the first one. That's probably, I would guess, maybe within a month. They expect to have West Township's new assessments released by some point in May. And just so you'll know, when I say West Township, that's the area bounded by North Avenue, Pershing, that's 39th Street, Harlem Avenue on the west, and then the Chicago River on the east. So that area, that's lots of property in that area. We should be seeing those assessments by May. But yeah, just in terms of what we're seeing currently at the Board of Review for our appeals of multifamily buildings, there's an ongoing tension, as I indicated, large initial assessment increases at the assessor's office, and then the board has, in many cases, seen fit to rein those increases down back, and we typically are relying on appraisals, income and expense evidence, and cap rates. From the city, I would expect to see cap rates about 7 or higher, at least at the Board of Review. The assessor may come in a bit lower than that. So that's the quick and dirty for right now.
Thanks, Jerry, for sharing all that information with us today. If you would like more information on that, Jerry, if you don't mind, can you just drop your contact information into the chat there? And please feel free to reach out to him for any additional information, and we'll definitely keep you updated regarding that as well. Tony, what can you share with us regarding some of the commercial real estate market?
Sure. The market is, we're getting pretty good activity in the market. We're getting a lot of investors coming into the market from out of state. We do take time to try to come up with a strategy for those investors to make sure that they get a soft landing in Chicagoland, and not just any old property. And we've been reviewing quite a few properties that have been marketed by some other firms, also for our clients, and just trying to help them to understand some of the logistics and managing those assets. Some of the neighborhood challenges and opportunities, depending on where they are. That's very important. and also getting them situated with financing. The team, Jerry, to help out to understand taxes and what we're going through as far as with our current reassessment. I see Willie on the call as well. Willie's a property inspector that works with a lot of our out-of-state investors to help them to get an understanding of the property prior to coming to the market, or understanding. A walkthrough with Willie is probably a better walkthrough than a walkthrough with a current investor, because Willie will be able to tell them some of the challenges and opportunities. Please put your contact information, Willie, in the chat as well. Very competent building inspector. I could talk about a few of the opportunities that we have, Travis, or do you want me to hold off and do that a little later?
And I can actually pull up the flyers for that if you want to go over that information now.
Yeah, let's look at it. One of the opportunities we have is in the South Loop of Chicago. It's a redevelopment opportunity. We have Atletico on the first floor of the space. Atletico, very strong tenant. They have over 500 stores around the U.S. They just signed a new renewal. And in the other space, we think it's a good opportunity if fully leased up at the price of $6.5 million. This property would be a 10 cap, and a 10 cap in the South Loop is unheard of. Also, it could be a redevelopment play with the DX zoning. There's also parking next door. So there's a few other things that you can do with the property. The current infrastructure of the asset, so I understand, and will support another few floors without changing the structure of the building. And some of the other buildings on that corridor have been redeveloped in that way. Could be a mixed-use commercial residential project, or just fill it up with office. It's a lot of things you can do with that zoning, but we're priced at $240 a square foot, which is right in line with the market. What else do we got?
The next one will be the Cornell property. I'll pull that one up now.
7708 South Cornell. Just a nice bite-sized deal, turnkey asset, fully occupied. You're talking about $587,000 in a nice pocket of South Shore. Property's been well maintained. Just a clean asset. I want to say about an 8.25 cap going in, and rents are below market. So there's some upside in that deal. Not technically on the market, but if you're watching this, you're getting a quick preview of some properties that we have coming to market. We also have a 7201 Southwestern, a 18-unit property, fully occupied. There may be one or two vacancies, but that property is $850,000 and a double-digit cap rate going in. We're looking at a cash-on-cash return north of 25%. It's really hard to find that in this market. We also have a 8-unit with 3 and 4 bedrooms in South Chicago, South Shore as well, that if you want to find out more information, make sure you reach out to the Multifamily Investment Advisor team. Thanks for that, Travis.
Thanks for that update, Tony. And as always, if it's always Monday at noon, we'll be here, the Multifamily Investment Advisors team here, where we'll be going over the multifamily market update. And as always, if you are on YouTube, please feel free to subscribe to our page, where you can also watch all the recap episodes that we've had in the past as well. Thank you all and have a great day.
Thank you.
Thanks, guys.